everybody. I think we'll go ahead and get started. I think we have enough people in here. So good evening, everybody, and welcome back to Walks and Wall Street. Today is Wednesday, February 14th, 2024. It is Valentine's Day, so happy Valentine's Day to everybody in the chat. Hopefully you all had a fantastic Valentine's Day, and maybe even many of you are, going out to your Valentine's Day dinners. But for those of you who aren't, you're more than welcome to join us right here on Walks and Wall Street, Valentine's Day edition 2024. Anyway, now we have a lot to talk about, okay? A lot to talk about tonight. I apologize for yesterday. There was no live stream yesterday, and there was really no excuse for it, by the way. I went home because it was a long day. I go home, I'm like, you know what? I'm gonna take a nap for an hour. I set my alarm. Turns out my phone died, and I woke up at like 2 o'clock, 3 o'clock in the morning, and I just totally went to sleep ridiculously early, and totally missed the stream. So I apologize for that, but I think my body was telling me that I kind of needed to take a break. Okay, let's jump right into this thing here. First up on the chopping block, big news. Okay, breaking news. About 2 days ago, we got the January 2024 all items CPI number. Okay, so CPI came in higher than expected, but it did come in at 3.1%. Now, if we go all the way back to last month, the December 2023 number, we were at 3.4%. So we've come down some, okay? But if you remember, if you go all the way back to June 2023, that's when we hit that low point in inflation right around 3%. So from June, we hit the low at 3%, and then we've been kind of bouncing around and really consolidating in this 3% range for inflation. Now the question is this: is the 2% target, right? Because we all know, if you look at the Fed's mandate, so the Federal Reserve's mandate is price stability. That's one of the two parts of the Fed mandate. The Federal Reserve is confident, right, in its ability to be steadfast in bringing inflation down to that 2% target. However, is 3% now the new 2%? Are we going to be living in a new normal environment where we have higher inflation for longer? Now, this isn't, astronomically high, okay? It's not the end of the world. Is it acceptable? No, I don't think it's acceptable, and I don't think anybody is claiming that it is, but it's not the end of the world. I mean, if you think about other countries, right? Some countries that we talk about a lot are battling triple-digit inflation, 100%, 150% inflation. In the US, obviously our target is 2%. We're running a little hot at that, right at 3.1%, so still not acceptable in any means. But is this the new paradigm? Is this the new norm? We'll talk about that tonight on Walks and Wall Street. And what does this mean for Fed policy going forward? I want to quickly take a look at the CME Fed Watch tool, okay? And since I'm near my computer, I'm actually going to drop this in the chat. So go ahead and look for my name in the chat. It should be highlighted in yellow, Walks Wall Street. And you'll see that I just dropped the link. It's cmegroup.com/Fed Watch tool, okay? Now, it says there's about 34 days, 16 hours, 45 minutes, 20 seconds to the next FOMC meeting, but we could actually look at the probabilities and what the market thinks that the Fed funds rate is going to be next quarter, next month, and even at the start of 2025. So I want to bring you behind the screen here, and you'll see what I'm getting with this in a moment, so please bear with me. What you're looking at, my friends, is the CME Fed Watch tool, okay, or the Fed Funds Futures. Now, the end of 2024, so December, the market is pricing in about a 23% likelihood or 23% probability that the Fed funds rate is going to be in a target range of 4% to 4.25%. Okay. Now, currently we are at 5.25% to 5.5% right now. So the question is, right? And again, follow along in the CME Watch tool that I just dropped in the chat. If inflation continues to run hot, right, the expectation was for a 2.9% inflation print. We got a 3.1% print. If inflation is still running about a percentage point above the Fed's mandated target, and stock markets are at all-time record highs, okay, equity markets are performing well, real estate valuations, depending on where we're looking in the country, are still near record highs. What is the catalyst to, like, why would the Fed, right, why would Fed Chair Jerome Powell want to cut interest rates? Why is the market pricing in rate cuts for this year if we still haven't achieved our 2% target? And it doesn't seem like we're making that much material progress, right? Not to be a Debbie Downer. I mean, there's been a lot of progress, but it seems as if we've stalled out a little bit. So in the chat, if you guys type CPI, okay, CPI in the chat, the Nightbot is going to drop a great free resource for all of you, okay? It is the U.S. Bureau of Labor Statistics website, and it has the 12-month percentage change of the Consumer Price Index for all of the selected categories. This is an amazing free resource for all of you, and you can actually see what we're talking about here, okay? So the headline number has absolutely cratered. In June of 2022, inflation was running rampant in the United States at about 9.1%. Inflation's been in free fall all the way going to June of 2023 at 3%. And then the whole year, we've been pretty much just bouncing around in that 3% range. So the question is, what is going to be that deciding factor that finally cracks the back of inflation to get us back to that 2% target? Now, I have the answer in mind. I don't know if I have the right answer, but we're going to talk about that tonight on the live stream. So let's go ahead and get started. Just a quick announcement though, everybody. Quick announcement. Tomorrow is Thursday, okay? Tomorrow is Thursday, so we will be sending out our free investing newsletter. You are not going to want to miss this issue. I think this is probably going to be one of the most important issues I've sent out in the history of the newsletter, okay? And if you want to sign up to receive that tomorrow, right at the closing bell, go ahead and scan the QR code on your screen and punch in your email, okay? That's gonna bring you to our Substack, and you'll be signed up to get our newsletter. This is what it looks like. This is last week's issue. We talked about artificial intelligence. We talked about some of the specific growth metrics of AI. We did a deep dive into Microsoft's earnings report, as well as Alphabet and Apple. We talked about NVIDIA. We talked about the IPO markets and the return of the M&A market, as well as private equity. We touched on monetary policy, but this week is going to be all about inflation and the upcoming correction in the market. How can we find good entry points to get back in and capitalize on, honestly, one of the strongest and most ferocious bull markets that I've ever seen, which is right now. Okay, I'm going to go ahead and close up the laptop, everybody. Let me turn off the music here. Now, I'm not sure if you guys noticed, I've been putting on jazz music at the start of the streams. What do you guys think about that, by the way? Thumbs up, thumbs down on the music? Anyway, give me a minute, we'll get started. All right, let's get this Valentine's Day show on the road, my friends. Again, apologies for yesterday. I totally just fell asleep. I was exhausted, so my apologies for not doing the stream. Once again, if you want to sign up to receive our newsletter tomorrow, just scan the QR code on your screen, punch in your email, and we'll be ready to go. All right, let me get the QR code off the screen, and let's kick this thing into overdrive, my friends. I see Steph UF, good to see you. As always, Nate Webb is here. Maddie, Dale, welcome. Lena Sandoval, what's up? Ooh, let me turn on the do not disturb. Okay, JC, what's up? Vegas 1, Michelle K, good to see you. Bottomless coffee, FredX. Bree Grams is guaranteed to make you more than 3% smarter. I appreciate that. Thank you, Bree Grams. Vinny is here. What's up? Welcome, everybody, and happy Valentine's Day. Teresa Diaz, TD from California. Thanks for joining us. Jen Zen says happy Valentine's Day, Tom. Sharon is here. Sandra from Canada. What's going on? Our neighbors to the north. YouTube Adventure, what's up? RAC says good night, Tom. And Andy is here. Lori Crockett Owens. Ivan Hernandez, welcome. Yeah, so, a lot to talk about, I think, and that's as shelter costs continue to come down. I'm not sure if anybody remembers. Hold on, this is the Polo Bar. This is a very exclusive place. Polo Bar by Ralph Lauren. But I'm not sure if you guys remember, and I wrote an article about this, and I sent it out to the chat, to the team here. And I believe the article was titled In Order of Liquidity. Now, everybody's been talking about how monetary policy, right, how the Federal Reserve pulls the strings on the economy in two ways. Number one, they can manipulate interest rates, right, which is the Fed funds rate. And number two, they can manipulate the size of the balance sheet, or the Fed balance sheet. And the Federal Reserve's balance sheet is made up of mainly U.S. Treasuries and mortgage-backed securities. So when the Federal Reserve starts to transition from quantitative easing, right, artificially suppressed interest rates, to quantitative tightening, the asset classes in the market that are the first to react and reprice for a higher for longer, right, or a higher interest rate environment is the asset classes that are very liquid, that have the most liquidity, which would be stocks, right, equities. And that's why we saw right when the Fed started to raise interest rates, a lot of these very high beta growth stocks, right, that do really, really well when interest rates are artificially suppressed, they get crushed pretty much automatically, right? And a lot of them declined, 70, 80, and even 90%. Now, the reason for this, as we're standing outside of Trump Tower, it actually seems like there's a big police presence here. You got one NYPD cruiser, you have an undercover one right here, and you have a lot of these barricades. I don't know if the former president's in New York. Maybe he's here for some other court case or something. Anyway, there's barricades all over the place. But one of the ways, if anybody's ever worked at a big bank, right, at an investment bank, or maybe at a hedge fund, or maybe you're just running your own portfolio, you've probably heard of something called a discounted cash flow model, or a discounted cash flow analysis. And when interest rates are very, very low, right, the present value of a company's future cash flows are worth more. But when you have the discount rate, when you have interest rates going up, the present value of that company's future cash flows are now worth less, and the market needs to reprice that asset for a higher rate environment, right? And since equities are pretty liquid, it takes it really takes no time for that repricing to happen. So you have these huge moves in the stock market, right? Particularly in the high beta growth stocks, but you really don't see that drastic, super sharp repricing in the real estate market, mainly because there's not a lot of liquidity there. It's a rather illiquid asset class. So once again, not to sound like a broken record, but this is a really interesting correlation that I think everybody should be paying attention to and studying. So if you type !CPI in the chat, once again, !CPI in the chat, it's going to bring you to the Bureau of Labor Statistics CPI itemized infographic. And what I want you to do is deselect every single factor on that infographic except shelter costs, okay? And you'll notice something very, very glaring. You'll notice that shelter costs was the most lagging category of CPI. Now you had, you know, gasoline prices absolutely collapse and crater. Almost every single category of CPI totally fell off a cliff and collapsed, except shelter costs. And that's because it is very lagging, right? Is an extremely lagged portion of CPI. Because it takes interest rates a little bit longer to filter through the real estate market than it does the equity. So the point I'm trying to make is the one thing that's going to bring the headline CPI number back to the 2% target is if we continue to have extreme deceleration in shelter costs. Now, the good news is every single consecutive month, we've had a decline in shelter cost or the category. So for December, right, we had a decline, and now for the January CPI reading, we had an additional decline in the shelter cost category. So assuming that trend continues, which I think it will, I think we have some good news here in terms of inflation continuing to come down. I don't know, what do you guys think? Do you guys think the Fed will be successful in getting inflation down to that 2% mandated target? Or do you think we even need more rate hikes in order to get that job done? Let me know what you think. Hey, JC, what's up? Says, love the beautiful American flag displayed at the Trump Tower. I agree. I love it too. Hey, UniJ23, what's up? Thanks for joining us. Glendis' New York City looks so much different than it did yesterday. Totally, it was snowing yesterday. Elliott Wave Reviews says, hey Tom, do you think the Fed can make 3% the new moving target going forward? Now, a lot of people thought about that. A lot of people were, you know, saying, is the Fed just going to cave in and make a new mandated target, just throw it at 3%? I think you'd have, I don't think that would go over well with the American people. It's just, let's just say that. Yeah, I don't think 3% will be the new target. Mighty Mole says we need more rate hikes. John Sunderland says we need less government spending. Yeah, I think that's probably the least likely scenario is for us to get less government spending. Unfortunately, now even though I agree with you, there's probably a 0% chance that our government's probably ever going to do the right thing. So. Mighty Mole says, Tom, my son works for Fisher Investments, and there are too many millionaires. Interesting. Interesting. Yeah, I know the snow did melt quickly. Now, here's the thing. We've been having a lot of these falling ice events, like falling snow, falling ice from the buildings here. So you got to be careful with that. Hey, Peter says, happy Valentines. A few weeks ago, I made some chocolate soap to give the friends today. Interesting. Very interesting. Huh. All right, let's get inside the Apple Store because it is quite freezing today. I wasn't expecting it to be this cold, but it is. It's about 32 degrees, but it feels colder. Actually feels a lot colder. Somebody says, Tom, I think government should take swift action against the utility companies. The prices are too high and they need to take swift action. Well, I actually have some differing opinions on that. I think the government is the reason why a lot of our energy costs are so expensive, right? If you've ever seen your electric bill, particularly here in New York, one of the things they did, they're actually shutting down, in New York State, they're actually shutting down nuclear power plants. If you can believe that. I mean, how ridiculous is that? Nuclear is the cleanest form of energy, right? And I would say, you know, my politics on green energy is more, you know, left-leaning, liberal. I want a cleaner and safer environment. And the way we do that is through investing very, very aggressively into building out a nuclear infrastructure in the US. But for some reason, we're actually doing the opposite of that. We're actually putting more regulations on that industry. But, you know, not to get too political, but nuclear is the way to go. Ace Options Trading, I did see that. This is Tom. Mark Zuckerberg is coming for the Vision Pro. Yeah, he made an interesting video, right? You know, Mark Zuckerberg made an interesting video, and I was kind of laughing when I was watching that video, because although I believe Mark Zuckerberg is correct in everything he said, I think he's missing the point, and I think I could explain a little bit. But the point is, and what I believe, and I think we've gone over this many times, this is the Apple Vision Pro right now. You could have a far superior product, right? In every single way, the product could be far, far superior. But if nobody knows about it and the marketing is not there, nobody's really going to care about it, right? So to Mark Zuckerberg's point, he's like, hey, everybody, I tried out the Vision Pro, and I could tell you with certainty that, you know, our Meta's Quest headset is way better. So I don't know, and he was like sort of perplexed why everybody's, you know, hyping the Vision Pro and buying it. To which I have to say, Mark, you're probably right. Your headset is probably way better than Apple's, but that's not the point, right? Nobody markets their products and creates that desirability factor better than Apple. So I understand that you're trying to go all in on making the best product ever, right? But you also need to invest the same amount of money, time, and energy into the marketing, right? Into the branding. In full transparency, I had no idea what the Quest headset even looked like before the Vision Pro really came out, right? So I think that's just a testament to how great Apple is in terms of the branding, the marketing, and creating that really cult-like audience, right? And that's what the team over at Meta is missing. So if I could provide any feedback for Mark Zuckerberg, not like he needs it, the guy's a deca-billionaire, but it would be this. It would be, Mark, your product is obviously superior. Everybody knows that. The problem is nobody knows your product, right? You need to somehow make Meta have the branding and the desirability that Apple does, right? How many people are diehard Apple fans that may have 2 or 3 Apple computers at their house, iPhones, whatever, iPads? Probably a lot of people watching this live stream. I know I'm like that, right? I've probably spent tens of thousands of dollars on Apple products throughout my lifetime, and I won't use anything else. Is anybody a diehard, like, Meta user? Probably not, right? So you got to create that desirability and that effect. Does anybody agree, disagree with that? I think, you know, a lot of times these tech people, right, are such geniuses that they can overlook, you know, the main point or the main factor, which is, you know, the marketing, the branding of the product is sometimes the most important, right? All right, let's head back up and out. I'll give you one more shot or view inside the Fifth Avenue flagship Apple store here. Joel PM says Apple still does billboards, very old marketing. Brendan O'Brien says weird because Apple laptops / desktops most secure and iPhone least secure. TK Porsche says I challenge that. The Meta product, is anyway. Oh, you think the Vision Pro is better? Maybe, yeah. I mean, that may be. I actually haven't tried out either of them yet. But I remember our conversation that we were saying specifically, is that the Vision Pro, the marketing. Well, I'm just preparing to head back outside. The marketing video for the Vision Pro is unbelievable. I mean, the thing is freaking unreal. But look, I mean, that's just another bull case, right? A lot of people seem pessimistic about, Meta's Quest headset and says, the thing stinks. It's never going to catch on. Number one, it really doesn't need to, because Meta is such a cash cow in and of itself. Meta is totally subsidizing that metaverse play with the Vision Pro because they make so much money on their ad revenue, right? So the way I kind of look at it is, and I'm not saying buy the stock or don't buy the stock. I'm just using this as an example. You should say you're buying the stock for what it is now with all of the amazing ad business. If this metaverse thing actually works and it catches on, that could be a double, or you could quite literally double the business on that. Now, I don't know if it's going to work. I don't think anybody knows if it's really going to catch on and work. But if it does, I mean, that's like a whole other company, if you really think about it. If this whole Quest metaverse, everybody living in a headset is really going to catch on, well, then that's going to be a whole other company that could potentially be worth, hundreds of billions on its own. So, hey, Moonlight is here. What's up? Thanks for joining us on this very frigid night in New York City as we walk down Fifth Avenue. John Kelly, this is very true, Tom. It's like the old cliche where too much technical smarts can look too far beyond common sense. Hence realizing marketing these things may not be as easy as they assume. For sure, sometimes, build it and they will come is not, doesn't really work out, right? I have a lot of friends who are diehard Android users, and they say, I don't understand how anybody could use iPhone. There's so many features, so much, better stuff on these Androids. Sometimes it's just about the ease of use, right? Mass market product. The average person, okay, and I think that's what Steve Jobs did such an amazing job of, no pun intended, is he made amazing products that is easy to use for the vast majority of people. It doesn't matter if you're 5 years old, it doesn't matter if you're 50 years old. If you have an iPhone in your hand, the ease of use is just, it's really admirable to think about. It's so easy to use. It's plug and play. The operating system integrates with all of your different devices, right? From your iPhone to your Mac to your Apple TV. It's just such a seamless and easy user experience. Anyway, let's start to head down. This is some perspective on just how windy it is tonight. So you do have some snow, not a lot, but the thing is, you'll see the snow sticking in Central Park, but unless we get a lot of snow in New York City and it's cold multiple days, if not weeks in a row, it's not really going to stick on the sidewalks and on the asphalt, just because so many people are walking on the sidewalk, so many cars are driving. So unless we get like a foot of snow or like 6 to 8 inches, you're not really going to see a lot of the snow on the sidewalks. So in other news, I always like showing this building here. From what I remember when I would go into this building as a little kid, these stained pane glass windows, whatever you call them, I think they're worth like $5 million each. Now this used to be an old, like, not a fashion store, but like a hair design. I believe it was called Frederick Fekkai. And they had a little plaque sort of giving a description of those windows. And apparently it was a gift from somebody, they're custom made. and those windows are worth like $5 million alone or some crazy stuff. Anyway, now let's talk about the duration of this bull market. Now, as we know, the S&P 500 the last 2 days fell into a little bit of correction, but today we've rallied right back and closed, I believe, just above 5,000 again. And I've been seeing a lot of commentary, okay? Usually I don't watch the news. However, I will watch some financial news. So I've been reading a lot of articles of analysts who differ with my opinion. I think it's very important to do. And one thing I noticed is that there's been this really, I would say, aggressive call on Wall Street saying that the market in general is going through what they call a blow-off top, right? So an irrational, exuberant, blow-off style top. And I couldn't be in more disagreement with that. And I don't really understand how they're coming to that conclusion. Now, I could be totally wrong, and they may be right. But I'd like to sort of explain my point about that, because first of all, let's look at the major equity indices, okay? Look at the S&P 500, look at the NASDAQ 100. I like to use the NASDAQ 100 because it's more concentrated, like higher beta type stocks. And then the Dow. The S&P is only about 3% out of its 1.5 year long consolidation into new high territory. Only about 3%, right? That's like nowhere near blow off top territory. That's the market just starting. Okay, that's just the start of it. And you could say that across the board of all the major equity indices. Additionally, usually what happens, if you look back throughout market history, the first companies and the first stocks to break out into new high territories, those are your true market liquid leaders, right? And we already know what they are, right? They're the NVIDIAs, your Microsofts, your ServiceNows, those type of stocks. They're already breaking out and are so far out and extended into new high territory. Now, what usually happens is those stocks come back, they correct, and then the market rotates into what I call the tier 2 ideas. So the companies that may, not have as blowout earnings as the leaders that are already out, they get rotated into the second-rate ideas. And all of those second-rate companies, which we're going to talk about in tomorrow's newsletter, they're still like 20-30% off the highs, right? So they're still just trying to come out of their bases. So, when everybody's calling about, this blow off top, irrational exuberance in the market, that usually really only happens when everything is up and out and extended and the market's been raging for 52 to 90 weeks. I know that's a big time frame, but we're going to sort of talk about that and explain what I mean in the newsletter. Guys, we have to understand, okay? Bitcoin, that just crossed $52,000 today, okay, didn't even make a new high yet. So if you want to talk about irrational exuberance and a blow off top, we're not even at new highs yet for crypto. So this is actually what I kind of like to see, and I'm getting a little bit excited here, right? And again, just to be transparent, I could be wrong. I'm just sharing my thoughts, just like we do each and every night on the live stream. But what's making me very, very encouraged about the health and potential duration of this market is that there's so many people on the street that are saying the rally's already over and that it's not sustainable and that it's irrational exuberance. That's exactly what you want to see at the very, very start of the new bull. Because what usually happens is when the leaders are already up and out and everybody denies the rally, at some point, right, they're going to have to answer to their investors and they're going to have to chase these things into the highs. And all of that money on the sidelines is probably going to push this stuff even higher. So that's kind of my, I would say, counter thesis to what the main financial news narrative is. But I don't know, what are your thoughts? Does anybody disagree with that, agree with that? Are we headed for another '08 style financial crisis? Is it going to roll over right now? What do you guys think? Any thoughts? Hey, hang with Mark Mom, what's up? Good to see you. This is good evening, Tom, mods in chat. Bitcoin grew to 52,200. We're getting close to 67,589. I'm excited about the economy. Nice and bullish. Yeah, Bitcoin is just getting engaged in gear here. And if I had to make a prediction, which I don't necessarily like, because people sometimes just randomly will do what we talk about here, which is not the point of the live stream. The point of the live stream is just to have a collaborative conversation about the markets. But I am positioned for this thing to hit a new high this year. That's how I'm positioned. I don't know, any counterpoints? I'd like to read some counterpoints. Hey Brad, what's up? This is Tom. In this day and age of chasing algorithms, new highs snowball. Yeah. Mega says BTC is too expensive to earn much. Swearworks, a simple question. Would you rather hold US dollar or Bitcoin for the last 10 years? What about the next 10 years? I see your point. I totally, if I had to hold one or the other, I'd hold Bitcoin 100%. If it was you have $100,000 worth of value, you could either keep all that in cash for the next 10 years or keep all that in Bitcoin for the next 10 years, I'd put it in Bitcoin. Basically, Biz is not '08 here, but there will be a large correction. Well, I think that's a given, right? If you look at, duration of a normal bull market, the average true market leader throughout the course of a cyclical bull is going to pull back to the 50-day 5 or 6 times, right? Those are, with the way NVIDIA has come out, right, with the way ServiceNow has come out, Microsoft, all the leaders, SMCI, what was that? These things are going to come back to the 50, and that's going to be like a 25, 30% drawdown. So I would agree. I would totally agree. All right, let me get some more comments. Vinny says the economy will be fine, but for commercial real estate is set for hard times. That's actually a really interesting comment. We could talk about that. I think you're right. Now, 2024 through 2025, there's going to be more CRE loans maturing than at any time over the last 40 years. All right, let me get some more comments. Peter says, I think you're right for the near future. The market will correct when you least expect it. Rationalization is a dangerous psychological trait, says Peter. Hang with Mark Mom says, Tom, not headed for another financial crisis. I don't see it at Disney's. It's packed to the gills. Tourists are tossing money into our economy. That's another good point. Everywhere that I go, right, and you guys watch these live streams in Manhattan, restaurants are packed. People are out. People are hanging out. When I'm out at restaurants on the weekend, things are pretty full. Things are probably pretty full tonight for Valentine's Day. Let's check out. Hey, this will be a test. So this is the restaurant inside 53 West 53rd, the building right on New York City's Billionaires Row, and there's not an empty table. Can you guys spot one empty table here? It's totally packed. And the upstairs is totally packed too. Now granted, it is Valentine's Day, but I think we get the point. Right? Consumers are out spending. Consumers are out spending, that's for sure. That's a great point. Yeah, Brad's brain says it's a presidential election year as well. People have been, surprisingly, in my view, the people I talk to, surprisingly optimistic about this year. Going into it, and I've sort of explained my position oftentimes on the live stream. I thought this year, well, let's not jinx it. I thought there was going to be more like baiting and more division by the media. Now maybe it's I don't see it because I don't watch the news. I don't watch Fox News. I don't watch CNN. But I feel as if things have been pretty tame. I don't feel like the average person is getting all pent up about this election. I mean, it is pretty far out, but it is in November. But I feel as if everybody's just kind of numb to it at this point. I mean, would you guys agree with that? I mean, I haven't really seen any craziness. That's kind of what I was bracing for this year. But excuse me. Carl Ross says, Tom, look at the fundamentals. Many are busy paying off debt. Yes, those with small loans are living the life, but many are in debt to the hilt. That's also a good perspective we can't ignore. So what Carl is saying is absolutely right. So we do try to be optimists and look at all the positive data. Now, one of the pieces of advice that I was given by a really successful trader is that you always want to kind of look for the data that supports the overall trend of the market. But what Carl is saying is 100% bang on accurate. And we've talked about this in the last newsletter. We covered all of the major banks, right? This was 2 newsletters ago. And that's because it was the start of earnings season. Now, at the start of earnings season, we always hear from the major financial institutions in America. Now, what can we gauge and garner? What kind of data can we get from those major financial institutions, like the big banks, the credit card issuers, and the like? Well, we can get a glimpse of the health of the average U.S. consumer. Now, we're seeing a couple things, to Carl's point, which is a little bit concerning. Now, what I always look for immediately whenever Bank of America, JP Morgan Chase, Citi, American Express, or Discover, whenever they report, I automatically look at consumer credit, particularly credit cards. Now, credit card debt has hit yet another all-time record high here in the United States. But not only that, that's really not the concerning part. The concerning part is the trend of delinquency. So the 30, 60, and 90-day delinquency rates of people falling behind on their credit card bills. Now, this is just starting to, I would say, trend back to pre-pandemic levels. So which would be Q4 of 2019 levels. Now, if you guys want to watch that and take a look at it specifically, if you scan the QR code on your screen and punch in your email, I actually took screenshots of these banks' earnings reports where you could see the trajectory of the credit delinquency and that it's clearly headed back towards pre-pandemic levels, right? So I'm going to be sending out something similar tomorrow, right as the market closes. So if you scan the QR code on your screen and punch in your email, you'll be signed up to receive all of our free market research every other Thursday. So we're going to send that out this Thursday. But it's definitely an interesting trend to watch, and it's an important trend to watch. What that really tells me is that a lot of the pandemic stimulus and the savings that were, built up due to all the money printing, if you will, is kind of drying up in a way. Hold on, I gotta plug the phone in. Okay, I think we're good. When it's cold out, the battery drains so fast. Hey, NBA Elias, good to see you. Thanks for joining us. We were just talking about these when many were expecting CPI to be back in the twos, 2.9%. Now check out the Steinway Tower. This is the skinniest residential apartment building in the entire world. This thing is amazing. You have full floor residences with unobstructed views all the way to Connecticut, the George Washington Bridge, and all of Midtown Manhattan, stretching all the way down to the World Trade Center. It's just a fantastic, fantastic building. Hey, Jeff W277, what's up? The ABX girl is here, welcome. JC says, Tom, how is that you put so much trust in CPI? So it's not that I put trust in CPI, it's just the numbers that we have to work with, right? Now, I know sort of what you're getting at is that if we actually really calculated inflation the way it's supposed to be calculated, that it would be much higher. And I understand that. But these are the numbers that we have to go off and work with, right? And believe it or not, you know, major market players, major institutions, and policy. So I think it's important we pay attention to it. I think it's important we use it, but it's also good to realize that everybody should be calculating their own personal inflation number, right? Their own personal CPI number. And if I had to bet, right? And I don't want to assume, but if I had to ask everybody in the chat what your personal CPI number is year over year, I would assume it's higher than 3.1%. I mean, it's higher for me, way higher than 3.1% for me. So I think that's why it's important to calculate your personal inflation number. Vinny says CPI is a cooked number, no faith at all. Yeah. Now it's mostly, I mean, the people who are really getting crushed by inflation, chances are people who have been renters who've been moving almost every year since the start of this big inflation boom, right? If you have had to unfortunately move to another state during all this rampant inflation, well, chances are your rent probably went up at least 25% per year. Right, and that's not an exaggeration, particularly if you live in a big city like New York, LA, you know, even Miami. I would say especially Miami. You know, the rents are just insane. You know, I hear what some people are paying for a studio apartment in Miami, and it makes me scratch my head. I'm like, those are New York City numbers. You know, those are almost New York City rents that you're seeing in Miami, Florida. I never thought I'd see the day that that would happen, but I guess it's true. Hey, Soho Joe, what's up? Good to see you. Thanks for joining us as we walk 57th Street, headed towards the west side. I know, NBA Elias, like Tom, I'm getting crushed with insurance rates, auto, and homeowners. I was reading an interesting article. You actually may have sent this to me. Somebody sent it to me, but there was an article in the Wall Street Journal that this year, well, 2023 to the renewal of 2024, was the highest auto insurance bump in history. Just to insure your vehicle, people are paying hundreds of dollars. It's kind of crazy. Now, I think that'll be an interesting poll in the chat. Now, who here in the chat pays for auto insurance? And what are you paying, and did it go up in the last year? So let us know. I think that'll be a good data point. Did your auto insurance go up in the last year? And if it did, by how much, and how much are you paying? Glenda says, I've been trying to consolidate my credit card debt, no luck so far. Yeah, I mean, that's the unfortunate thing, you know. Consumer debt is hitting an all-time record high, and it's the most expensive time in history pretty much to service all that debt, which is a bummer. Hey, Quick 12 says, the groceries alone that I buy each week debunk the CPI number. I feel that, man. I definitely feel that. I've always said the most expensive grocery store I've ever been to my entire life is the Whole Foods in downtown Miami. I mean, that place is just criminal. I think there should be a federal investigation into that place. Anyway, this is 157 West 57th Street. Banks says yes, 25% plus. Holy crap. Super White Shadows is $200 a month this year on a Jeep. Optimus 17 says I pay $183 a month in auto insurance now. That is crazy. Greg says 6 months, $300. Peter says I pay $1,100 a year, and it just went up by 175 bucks. IPDS says, Tom, I pay 160 bucks for an Audi. Jeff says just got my renewal, $300 more annually. So it seems like everybody's went up. Go forward to Tom, my car insurance is going up. Approximately $100 a month. No accidents or tickets since the 70s. Whew. Ike Voorhees, Tom, my insurance went up $25. Krog Dogs, my insurance went up $100, purely due to inflation. Anna says yes. Wow. So everybody's pretty much getting dinged and dented up with the insurance. 57. That's really unfortunate. Now imagine those people who have to, you know, insure their vehicles in the state of Florida. Now I heard if you insure your car in South Florida, it's just like absolutely ridiculously expensive. Optimus 17 says lives in Hudson County with higher auto theft, causes my auto rates to be higher. Wow. So I mean, think about that for a moment, right? And I'm kind of out of the loop on that because I don't own a car. But the government, right, not doing their job in being tough on crime and cracking down on crime, we are all inadvertently footing the bill for these criminals. That actually pisses me off quite a bit, knowing that. And again, I don't have a car, so I'm kind of out of the loop on this. I'm from New York. So if you live in a place where there's high crime, so I'm assuming, let's say if you have a car in San Francisco and you know, people are blowing out your windows every day to steal your iPhone and the cup holder, your insurance rates are probably going to get banged. That's really unfortunate. That's quite upsetting. Hey, Joe Munoz. Good evening, Tom. What's up? Peter says, I heard that the insurance is up due to car theft, increased storm damage, and vandalism. Wow. Bighorn MT says, yeah, Tom, South Florida, the insurance is really expensive. Ed Dunkel says there is a big increase in carjacking and auto fraud as well. Yeah, that's, wow. Huh. Yeah, I wonder what it must be near, like, San Francisco, California, because that's all I hear about from some of my friends that are still, you know, living in SF. They're like, I just sold my car because the windows will get blown out every night. Now, although I have heard of instances, and I believe they're quite isolated in New York, but I've seen on the news sometimes that, you know, different neighborhoods of Queens or in Brooklyn or the Bronx, they'll have these organized sort of crime on all the rims, and neighborhoods at a time can get hit by these criminals. I mean, that's definitely something people need to pay attention to. Interesting. C says, are there monthly vehicle rentals that include everything, including insurance? Yeah, I mean, I'm assuming you could rent a car and you could buy insurance from the company, right? Like Enterprise Rent-A-Car, I know does that. But sometimes I believe if you rent a vehicle with a specific credit card, you have to check with your credit card because they may provide the auto insurance for you as a perk in your credit card. Because way back in the day, I used to work for a rental car company. And I remember if you had an American Express card, I forget the exact card, but if you rented your vehicle with an Amex, it would give you the insurance included. So God forbid, right, God forbid, knock on wood, if you got into an accident or something like that, Amex would cover that. So please check with your credit card. Optimus 17 says these car crime rings have been happening in Morris County, New Jersey, where there are more luxury cars. It got really bad in 2023. Yeah, Crazy Autos is in San Francisco. You might as well just leave the windows down. Crazy. Now, I think I was telling you guys, when I was in Miami, I got pulled over right as I was going over the Haulover Inlet. For those of you who are from Miami or familiar. So I was coming over the Haulover Inlet, right? And I'm going into the town of Bal Harbor, which is one of my favorite places, by the way, in South Florida. I get pulled over by this police officer, really nice guy, really, really nice officer. And he's like, hey kid, your plate is expired. And I had no idea. And you know, he's like, really, the reason why I pulled you over, he's like, we see these all the time. You know, people steal these things, they rip the plate off, and then they, you know, put them on a boat, and they get shipped over to Cuba. So apparently there's a big crime ring down in Miami where all these people steal Vespas and scooters, and they put them on boats, and they ship them all around the world. Didn't know that, just found out. Buttercup says, did you work for Enterprise? I did. I worked for Enterprise Rent-A-Car as a teenager. That was one of my first jobs. Right on the Upper West Side of Manhattan. 83rd Street between Amsterdam and Columbus Avenue, by the way. That was the exact location. We were right across the street from Seinfeld's personal garage. So oftentimes I would see him filming the comedians in cars getting coffee. I don't know if that show's still around. Love Seinfeld, but... Anyway, if you guys are enjoying the stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these live streams every single day starting at 8:30, and we'd love to have you along for the ride. Wow, Zozo Bob says, yeah, Tom, vehicle theft for export in Miami is huge. Hey, Vladimir says, Peter Schiff's opinion is that the government releases rosy reports and end up negatively adjusting them several weeks later, which markets do really consider. Do you agree? Well, I mean, here's the thing. I would like to think that the government is not that deceptive to the public. Now, it is true that a lot of these numbers are revised downward, right? Particularly like the jobs numbers, sometimes they're revised down or revised up. That's why in the previous report, or I should say the next report, they'll always give an update on the revisions in the prior one. Now, do I think there's anything nefarious about that? I mean, I don't know. I'd like to think not. If you think about it, it's pretty hard to calculate, you know, to the T, right? That's why you have revisions. So, look, Peter's a great guy. I like Peter Schiff a lot. I think that's a great podcast. You should listen to it, The Peter Schiff Show. But, you know, Peter's a little bit of a sensationalist, and I think he would admit to that a little bit. Again, I love the guy. He's, like, everything Peter Schiff says is correct, right? But the problem is he has severely underestimated, you know, the power of the Federal Reserve and the duration of bull markets. So if you listen to everything Peter Schiff says, you'd never invest $1 in the U.S. equity market. You'd be on the sidelines through one of the most, powerful bull markets in history of the world, and you wouldn't have bought Bitcoin. And now the thing's trading at $52,000 on its way to all-time record highs. So, again, do I think the government does this intentionally? No, I don't think there's like some conspiracy where the government, fudges these numbers intentionally every time. They're just revisions, and the revision numbers have happened all the time, particularly in, the non-farm payrolls and things like that. But look, would anything surprise me? Like if there was an investigation and it came out that they're doing it intentionally, would I be like aghast? Would I be surprised? No, nothing surprises me anymore. I mean, they engineered a bioweapon in a lab. So, nothing surprises me anymore. Hey, Sabrina Fair, what's up? Good to see you. Thanks for joining us. Probably shouldn't have said that last comment, but we'll see if the channel's still up tomorrow. If it's not, All right, so this is Deutsche Bank Tower. Now, this used to be the AOL Time Warner Center here. Now, Deutsche Bank was the last standing major investment bank on the physical street of Wall Street, 60 Wall. Now they have vacated Lower Manhattan, and they are now here at Columbus Circle, the old AOL Time Warner Center. I'd love to take you guys inside, but a lot of times the security there is very, very strict about filming. But look at that. You have 220 Central Park South and Central Park Tower side by side. Beautiful views here as we walk around the circle.
Usual suspects, all of that.
This is the Jazz at Lincoln Center. Love the sound of the skateboard, by the way. This is the Mandarin Oriental Hotel. Put my gloves on. Give me 1 second. It's a bit cold out. Now, since we're here, let's head up towards Lincoln Center. Let's see what's going on up there tonight. And maybe we'll venture a little bit into the Upper West Side of Manhattan. Gary said what happened to the snow. It all went away for the most part. However, if you walk inside Central Park, there's still a little bit of snow. But I think it's good that we kind of are bringing up this conversation about, are the numbers forged? Peter Schiff calling for the end of the world. You kind of gotta be involved is really is sort of my opinion, because you could read all of this crazy macro research, right? You could listen to all these podcasts of these, Wharton MBAs and all these, major economists who are doing, kickflips in front of the camera, and doing mental gymnastics on, the markets and, how the US dollar is going to go to zero because of this and that and this ratio. But if you spend too much time on that, you're never going to take action on anything. And it's going to cause you to be paralyzed, right? It's called information overload. Now, a lot of macro, guys and gals on Wall Street, they seem so smart, but very, very seldom do they make money. Right? They may have had one good call, right? And that's the great thing about financial markets. right? That's the beauty of the financial markets, is because you don't need to be right all the time. You could actually be wrong 90% of the time, but the 10% that you were right, you made $1 billion. You know, it's sort of all about how you manage your risk. So, you know, all of these people who have been calling for the demise of the United States, the S&P 500 is going to go to zero, right? They've been wrong. I mean, the S&P is at 5,000. I mean, imagine if you've, you know, haven't invested in U.S. equities because you listen to Peter Schiff and you were invested in all these European stocks that have been underperforming, right? Earnings have been good at these companies. We cover them almost every day on the live stream. The earnings power is in the U.S. You know, it's good to focus and have the macro stuff on the back burner, but don't make that your whole thesis, because you'll never get engaged in the markets. You'll sit on the sidelines. You'll sit in cash. Hey, Ukrainian Royal, what's up? Says, hey Tom, hope you had a good day. Thank you so much for your very generous donation. Ukrainian Royal, hopefully you're well. We're currently at the very bottom of Central Park. This is the Trump International Hotel and Tower. You have the Jean Georges over on the left. You have the International Hotel entrance in the middle. And then this is where you have the residences. So if you own a condo or you rent at the Trump International Hotel and Tower, you go in right here. And it's right next to 15 Central Park West, which is one of the most desirable addresses anywhere in New York City, but not only New York, but the world. Hey, SoCal Lawrence, what's up? Thanks for joining. Now, another thing I'll say is this, and I think this is good for self-awareness. And I forgot who told me this, but real quick, this is the main entrance to 15 Central Park West. Pretty cool rotunda here. Gary, no. So Gary, Trump owns that one, and he owns 106 Central Park South. But there are a few buildings where Trump just licenses his name. It's true. But you know, another thing I'll say is this. I think we just need to audit our behaviors, right? So chances are, if you're watching this stream, you know, every single year, right, your life has probably progressed. You want better things for yourself. You want to make more money. You want to acquire, you know, maybe another degree, maybe you want to go back to college. Everybody, generally speaking, okay, in the US, you know, wants to be successful and wants to push towards success. Whether that's going to college, whether that's going to a trade school. Everybody in the Western world, right, because we're just talking about the US, you know, economy right now, everybody wants to progress. People want to buy a house, people want to have investments, and they want to do well. If that's the standard in America, you know, that alone will propel the economy and GDP growth forward. So when everybody is when you're listening to a lot of these podcasts, right, of all this macro, you know, doom and gloom, USA is going to go to zero, you know, just think about what you think about on a day-to-day basis, right? Think about your friends, think about your boss, your coworkers. Like, do you guys wake up every day wanting to, you know, succeed? Oh, next year I'm going to, you know, get that raise, or I'm going to get this different job, or I'm going to create this business, or I'm going to develop this software, right? Chances are every year you're pushing towards something bigger and better every year, right? So times that by millions of people across the country, you know, you're going to have growth. So I feel as if we're in our heads too much. We're in our own heads too much about, you know, all this macro stuff. Focus on what you can control, okay? Focus on you. Do the best you can. And you got to participate. You got to be a participant in this, you know, capitalistic system we have. just use history as a guide, I guess. Okay, this is the Smith up near Lincoln Center. Hopefully it'll be a little bit less windy if we go in here, which I think it is. Hey, Diana, thank you so much for your very generous $5 donation. Appreciate you very, very much. Cafe Fiorello is here. Hey, NYC Home. This is Tom. Yes, heavily. I'm looking to start a coffee company. Now it's a big passion project. Hey, let me know about it. I'll be your first customer, as well as everybody in the chat here. Hey, what's up, Dan Sang? This is, hey, hope you were inside during the snowstorm yesterday. I was inside most of the time. Now, the weather in New York has just been so crazy. Last week, it was like 55, 60 degrees, and now it feels like it's 20 degrees outside. It's insane. It's crazy. This weather is absolutely crazy. But good to see you, Dan. Hopefully your new job is going well. We'll have to meet up and talk about that. Well, let's cross the street and we'll head over to Lincoln Center. But it is quite the bone-chilling night. It's windy too. I think it's 32 degrees, but with the wind chill, it probably feels like 20, maybe 28 degrees out. It's cold. It's cold out. We got the light. Sabrina Ferris says, is that the Met? No, this is Lincoln Center. I haven't been to the Met in a long time. Maybe that'll be something I do this weekend. Oh, but by the way, so I just filmed another property tour, which I think you guys are gonna like. This is one of the most unique properties I think I've ever filmed. So, it's a triplex. But it's interesting because the triplex goes down into the ground. I don't really know how to explain it. But the building is called La Botanica, and it's in the East Village. It's on East 6th Street. It's a 4-bedroom, 4.5 bathroom triplex in the East Village. And it has about 3,000 square feet of interior space. And it has 4 separate outdoor spaces, including a 450 square foot deck on the outside. It's a really crazy apartment. It has a private art gallery. So it's really meant for a creative to purchase this. I mean, the thing is insane. I'm gonna send it out tomorrow, right as the market closes. It's gonna be at the very, very bottom of the newsletter. So if you wanna see that before I post it on YouTube next week, if you scan the QR code on your screen and punch in your email, right around 6:30 p.m. tomorrow, I'll email that to everybody. It's going to be at the very bottom of our free investing newsletter. But if you want to get an even preview, earlier glimpse of it, you can just Google La Botanica on Street Easy. It's a pretty cool property. Very unique. Massive triplex in Manhattan. Go for Hokies. What's up? Madison 32 says asking price. Ooh, it's a surprise. I don't want to reveal it just yet. You know, that'd be fun. What do you think? What do you think the asking price would be, everybody, on a triplex in the East Village on 6th Street, 3,000 square feet of interior space, 4 bedrooms, 4.5 bathrooms? What do you think the what do you think the asking price would be on that? And I think you'd be surprised. I think you'd be surprised at the asking price. Now, it is new development, so it's not an older building. This is new development. No, not 26 million. Not 30 mil. No. See, I think that's why you guys would be surprised. Yeah, Optimus 17, 4 million is a good guess. John 39 is an okay guess. Jeff W27745 is a good guess. It's a good guess. Hang with Mark Mom says 3,000 square foot G's is probably 6 million. Now, Hang with Mark Mom, you're on the right track. Now, it would be 6 million, but it's in the East Village, right? So I think this is good to get everybody acclimated to the different neighborhoods in Manhattan, because prices can drastically change just based upon the neighborhood you're in. And it may only be a couple blocks. You know, 10 blocks, the same apartment could be, you know, $2 million more. It's really interesting. But yeah, this is the East Village. It's a little far, so. Hey, Gary, what's up? Thank you so much for your very kind $10 donation. As I applaud your entrepreneurship. If you ever need website, digital marketing, or SEO help, I am a 20-year veteran. It is a pleasure to follow your adventures. Wow, Gary. Now, it's so interesting. This is kind of, it's a little weird that you're asking that, because I was just thinking to myself, and I was texting some of my friends, I need help with exactly that. I'm working on a project right now. I'll tell you a little, if you send me an email, I'd love to work with you. I was actually looking to hire somebody to do exactly that. Now, I want to make a website for the Behind the Street newsletter. Now, I already have a website that I made myself, but it's horrible. The thing is so bad. And I want to make a basic landing page, Gary. So I just want to make a basic landing page, you know, that has enter your email here. You know, it looks very attractive, and it just gives a brief summary about what the newsletter is, right? And one of the, you know, things I wanted to do this year, just to test it out, I wanted to see if I could drive paid traffic to the newsletter. Because right now, you know, with the stream and people sharing it, which has been amazing, by the way, it's grown to like 4,200 people, which is just nuts. I mean, to have, you know, 4,200 people reading, you know, my thoughts on the financial markets and the economy every other week. I never thought that would happen in a million years, but I was like, you know, what if I, you know, spent maybe $500, $1,000 of paid advertising to the newsletter? I don't know. So yeah, if you want to connect on that, we can work together. I appreciate your generous donation. Thank you so much, Gary. Hey, Julian's is here, another website developer, 4 years working on my own. Love that. So you mainly just do like freelance stuff, I guess. It's a pretty good lifestyle, right? Being able to pretty much work where you want. Yeah, hang with Mark, Mom. It's but yeah, I mean, I think 4.5 is a pretty good price. I mean, that's $1,100 a foot. You know, $1,100 a square foot is You know, Manhattan, again, depending on where you are, it's pretty good. It's pretty good. You know, some places in Tribeca is listed at like $2,500 a square foot, sometimes $2,700 a square foot. If you look at Billionaires Row, right, some of the buildings like at 157, these things are like in the $3,000 a square foot, which to me is just, oh my God, I can't even wrap my head around that. $3,000 a square foot. I mean, that's Manhattan real estate for you, right? I mean, some people, for the right product, are willing to pay $3,000 a square foot. It's crazy, but, you know, when you reach that level of wealth, like, I mean, imagine if you had $1 billion. Like, to me, that's kind of like inconceivable. Like, $1 billion is so crazy amount of money, because, you know, what's 5% on $1 billion, right? It's almost like it's impossible to spend $1 billion, because the interest you're making alone on the billion is going to be impossible to spend. So it's essentially like having unlimited money. So if you had that, right, a $20 million apartment, you know, a $50 million apartment, it's really not that unattainable, right? It's kind of eye-opening. It's wild. Anyway, Jeff says I'm 3 blocks from Detroit. I paid $49 a square foot for my home. God bless. Yeah, Manhattan real estate is just so different than anything else. It's kind of crazy, right? Speaking of Billionaires Row, here it is right here. 220 Central Park South, the one with the gold top. And then Central Park Tower. Hey, what's up, Dave? Western Mass Dave is here. Good to see you. NYC's Homes, Tom, if I may ask, why did you choose to reside in Long Island compared to the city? Well, I reside in the city now, but I really didn't have a choice back then. You know, my parents, you know, when you get married and you have kids, kids really don't have a say where you are. But I reside in New York City and Miami. I like the city. You know, the city's been falling under a lot of flack lately. You know, people talking bad about it. I still like it. I like New York City. I love it here. You know, it's going through some rough patches, but I still love it. Yikes. That guy was driving a little crazy. So was that guy. Give you guys one more look at the Deutsche Bank Tower. Joel PM, isn't that crazy? Says I could spend $138,000 a day from the 5% interest on $1 billion. It's just crazy, crazy, crazy. Crazy stuff, man. Now here's some of the snow that we have. Ren 1018. Yeah, I'm aware of the cyclicality of real estate. Now my biggest concern with real estate particularly very well known, right, is not necessarily on the residential side, actually. It's more on the commercial office space. Not the Class A office towers, but mainly Class B and Class C office towers. Because they're all vacant, and you're going to have a lot of this commercial real estate debt that's going to need to be refinanced at much higher interest rates. And you have an interesting situation where you have the lowest rent rolls in history with the highest vacancy in history. So, look, I think long term, it's actually good news that this is happening. There's going to be a big washout, and I think these buildings are going to get sold at foreclosure auction for pennies on the dollar, and people will probably just demolish them and build housing, which is what we need, by the way. So, if anything, maybe this is probably the most optimistic, pie in the sky reframe ever that you'll ever hear. But maybe the looming commercial real estate doom is actually what's going to solve the affordability crisis in the United States. I don't know if many people are sort of reframing it like that. If all of these commercial operators go belly up and nobody is renting this commercial office space, it's going to get sold at foreclosure auction for nothing. And if you can't convert it into condominiums, which you probably can't, it's very hard to do that, they'll probably just be demolished, and they'll just probably unlock the land value underneath and just build new residential buildings, which is what we need in New York City. This looks new here. I don't know if this is new or not. Look at that. Huh. I don't remember that being there. Maybe it's just me. I don't know. I walk here almost every day. I never ever noticed that. Maybe I just don't look down enough. Anyway. Man, my hands are freezing. Hey, Ed Potke, what's up? This is Hey Tom, Rite Aid stock is 15 cents. Yeah, now I remember covering one of the earnings conference calls on this live stream, and the CEO came out and said that we're gonna have to shutter a lot of our stores due to all the retail shoplifting. Let's actually go inside Central Park a little bit. You guys could actually see some of the snow. See, you never see the snow in New York City because so many cars, so much foot traffic. There's a snowman over here. Yesterday I walked past a monster snowman here. You guys are seeing a very frozen Central Park. Even though it's freezing, it kind of looks nice here. Very peaceful. Panda Express. Oh, here's some snowman body parts. Panda Express is Tommy going into Central Park at night. You're braver than I am. Well, I mean, it's 20 degrees out. Who wants to tango at 20 degrees? I think all the criminals are near the fireplace tonight. If I was a criminal, I think Central Park at 11 o'clock at night when it's 22 degrees out would probably be the last place I'd want to be. So if anything, maybe this is a little bit of an arbitrage. It's a New York City criminal arbitrage we're doing tonight. This is probably the safest place in the entire city right now. Wow, look at that. 220 Central Park South and Central Park Tower look insane from here. Look at how stunning that view is. Can you imagine the view from up there? Unreal. This is what I love about New York City. You're not going to get these views anywhere else in the world. And I think just the diversity in the views too. You're looking out into Central Park, then you see all of Billionaires Row. It's just an awesome place to be, honestly. New York City is just an amazing place. Hey, Gary, thank you so much. We'll be in touch. Thank you for your kind offer. Now check out the Steinway Tower. So in this shot, you can see the Steinway Tower, the JW Marriott Essex House, and 157, all in the same frame. So the developer Extel, EXTEL, was the company who actually pioneered Billionaires Row with 157. So 157 West 57th Street really kicked off this mega trend in the city of these, super tall skyscrapers. Then we have Harry Mackalow Properties, who did 432 Park. And then they also did the largest office to condo conversion in the city's history at 1 Wall Street. Wow, Sean says, Tom, my grandmother lives at Tower West 65th. Oh, West 65, West 96th, and her rent is still $290. Holy crap. God bless her, man. That's an awesome. I gotta reread that. $290 for rent. It's incredible. Absolutely incredible. It's crazy because I think I pay like 16, I don't even know how much I pay. I rent like month to month in the city, but I definitely pay, I think I pay around like $1,700 or maybe more for like a little tiny place. And it makes me scratch my head because every time I go back to Miami, and I go back to a massive house with the front lawn, a backyard, big patio, palm trees, mangoes, lemons, limes, it's just paradise over there. And I'm like, this costs me less money than renting in New York City. It's just so crazy. It's crazy. That's one thing about Miami that has been pulling a lot of people away from New York, particularly the city. Even though it's still expensive down there, it's just the lifestyle. You get a better and bigger bang for your buck. You know, $2,000, I mean, maybe not anymore, but, you know, on a mortgage, a little less. 3-bedroom, 2-bathroom home, 1,500 square feet on a pretty big lot. You know, in New York, that's probably like 8 grand, 10 grand. Yeah, Western Mass Dave. Quite literally, I kiss the ground when I get to Miami, for sure. And I'm about 5 minutes away from the beach, 5 minutes away from Sunny Isles. Look, it's a supply and demand problem. The city needs to build more housing units. It's pretty simple. I mean, you know, a lot of people in the city government want to play mental gymnastics about why everything is so expensive. There's a lot of people that want to be in New York because there's a lot of opportunity here and there's not a lot of places to live. So it's expensive. That's really about it. If you want to make it less expensive, you need a way to satiate that demand by bringing on supply. I mean, I don't really know what else there is. Brain says, but not everybody loves the Miami lifestyle. True. But I don't think, when you define Miami lifestyle, I think a lot of people think partying. I'm like the exact opposite to that. I just want peace and quiet. That's kind of the lifestyle I have down there. Very quiet. Go to the beach. Come home. Crazy Otto. This is Tom. I have a 40-year love-hate relationship going with Florida. I think we all do. That's hilarious. That's the comment of the night I'm going to give to Crazy Otto. I think every New Yorker has an ongoing love-hate relationship with the state of Florida. I think you're right. That's so funny. Now, speaking of apartments, this is actually one of my favorite apartments right here. This is Alwyn Court. Look at that. Stunning architecture, really beautiful. All the old architecture in New York, contrasting the new in the back. Just a great place. So everybody, it is quite cold out, and I think I'm going to call it a night. But I appreciate all of you who have come out to the live stream. I think we covered a lot of good stuff. If you enjoyed the stream tonight, feel free to leave a like on the video and subscribe to the channel if you're new. Last announcement, tomorrow, right around 6:30 p.m., I will be sending out our 3rd issue of the Behind the Street newsletter. All of our free market research will be emailed to you tomorrow night. If you want to sign up to receive that, just scan the QR code on your screen and punch in your email, and you will have access to our Substack, which is absolutely 100% free. We publish 2 times a week, and we're going to be sending it out tomorrow. So feel free to scan the QR code and punch in your email. But until then, everybody, I'll see you tomorrow. Happy Valentine's Day to all. See you later. Optimus17, appreciate it. YouTube Adventure, T-Cal, go for Hokies. Mohammed, appreciate you very much. Abdullah, Sabrina Fair, NBA Elias, T-Cal, Western Mass Dave, Hang with Mark Mom, I appreciate you. Elias, Yesterday 15, Chris B, NMB 45, thank you so much. Diana, Joseph Hardaway, Unij 23. Always a bull market somewhere. You just need to know where to look. See you guys tomorrow. FredX, take it easy from Alaska.